We're seeing yesterday the market in Kenya, a 13th day of gains, and I am wondering here, are we entering the sweet spot for equities in Kenya?
Yeah, I think this year is going to be a very different story from what we saw in 2011. A lot of value was eroded in 2011 and the market was down 25–30%. So there are a lot of bargains on the markets, and investors are basically taking positions in solid companies that they believe are going to make them good money in 2012. So this could be a good year.
I'm certainly going to be asking you where those bargains are secure in the market. But let's perhaps begin by looking at the question of whether are we getting into overvalued territory here, and also just in terms of the rally that we have seen, how much more does it have in terms of strength?
No, I think we're very far from being overvalued, given the current ratios that we're seeing on the markets. Companies, especially, let's say, looking at the banks that have been reporting earnings in the very recent past, we're seeing very solid numbers, and the latter part of 2011 was very difficult for the whole country. So if they were able to return such numbers in hard times, we are definitely going to see even a better year in 2012. Companies are looking regional, especially the banks. They're going into the whole of Eastern Africa, Southern Sudan. So we should see lots of potential. PEs are below 10 and dividends are fair. We are definitely in the right place.
Yeah. So let's look at some of those results that have come through. Yesterday, of course, we had some of the banks reporting, CFC Stanbic coming in, Equity coming in, Cooperative as well coming in. And on the face of it, those numbers appear to be pretty good. But I'm wondering here whether this is something that is sustainable, or this was a function of the high interest rates that we saw last year.
I think it's very sustainable, to be very frank. Equity, for instance, just looking at its track record over the past 5 years since they listed, it's been one of the best performers, always returning double-digit growth on numbers, and that's precisely because of their model. The Kenyan banks are able to earn a lot more and gain exposure from the whole of East Africa, and that's really growing additional revenue streams. We've seen KCB and Equity do great in East Africa, Southern Sudan, and now other banks such as CFC and Coop that announced yesterday have both said that they have intentions to get into South Sudan, because this is really the next frontier for Kenyan banks.
Yeah, but at the same time, yesterday we saw some of those banks coming under pressure even after those results. As I said, that on the face of it, at least to someone like me, looking at the market from outside, appear to be good results. We saw, for instance, CFC down 4.4%. We also had Cooperative down 3.41%. What's going on here? Are people taking short-term positions and forgetting the long to medium term?
Well, it appears so. A little bit of a slight correction. For Equity and CFC and Coop, who are all among the top gainers for this week, after announcing their results, CFC and Coop ended up being among the top losers for the day. However, I think for CFC and Coop, it was more of they returned less than what investors were expecting.
Right.
Equity, on the other hand, I would keep my eye on that stock given the numbers that they posted yesterday.
Yeah, but what about the fact that they are saying they might be coming to the market with a secondary IPO? Is that one that you would support if you were outside of the stock?
Well, all they're looking for there is additional capital. They're being very prudent in telling us this in advance, because for 2012, their numbers are sufficient. The capital adequacy is enough. So this is something that they're going to be doing in 2013. Coop Bank also announced the same and said that they would be looking for additional capital in 2013. CFC is the only bank that at present is going to be looking for money later this year, and through rights issue. So that could be advising investors as well.
Yeah. Is this just a banking story, Alistair? I mean, are we just talking here about stellar results coming out of the banking sector and everybody else perhaps going to struggle here? Let's talk about some of those areas where you're seeing opportunity coming into this results season.
Okay, well, aside from banks, we're definitely going to see some interesting activity through the year in other counters, including the investment, such as TransCentury and Centum. Those are stocks that are really being watched. These companies have reduced their exposure. For instance, Centum has reduced their exposure on listed stocks following last year's decline, and is looking into alternative investments and real estate. which is a very promising sector in Kenya at the moment. There's a lot of money to be made in real estate. TransCentury as well is looking heavily into infrastructure development all across Africa. They've raised capital in Europe, and they're going to be imploring that across the continent through power generation, roads and infrastructure. And these are also alternative channels of investment that we could see good gains from.
Yeah. So let's look at yesterday's trading. We had Uchumi up 8.5% in yesterday's trading. What's cooking there?
Yeah. Well, Uchumi, following its coming back onto the market after the suspension, it took a very big beating of the 1450 relisting price, and I think the investors in that stock really discounted it. They were not looking at the prospects for this company. Currently, there's even an investment bank here that recently released a piece on that counter, giving it a very strong buy recommendation, and we agree with that. Uchumi is a very efficient supermarket chain currently, and they look like they're going to be also among our stock picks for 2012.
Absolutely, and it does appear like they are unable, they're actually keeping out competition from South Africa, because we've seen, for instance, the likes of Pick n Pay, the likes of ShopRite getting into Nigeria and other parts of Africa, but no one is talking about Kenya.
Well, the retail market is it's extremely competitive right now. If you look at the number of players, the local players in the market, we have over 5 or 6 that are fairly dominant. In the past, it was Nakumatt and Uchumi. Now we've seen the likes of Tuskys, Naivas, and Woolmart, all local players that are getting very aggressive in this particular industry. So I think foreigners may not be very keen on coming to set up new shops over here, but would rather observe the market and see how the players locally are performing, and then maybe position themselves to invest in one of them.
Yeah, I shall certainly be posing that question the next time we've got Whitey Basson in studio here, or the CEO of Woolworths Holdings, Ian Moore, when they come in next for their results. But let's talk about the day ahead today. What are you seeing? Are we likely to chalk a 14th day of gains here on the market?
I wouldn't be surprised if we did. I wouldn't be surprised at all. We have definitely come off the very bad patch of the market. On the money market side, we're seeing rates coming down, and we, as investors, start. There's a lot of liquidity around. So, as investors get locked out of some of these auctions, they're going to look for other places to put their money, and it would be a good time for them to pick on these bargains on the equities market, because as the interest rates come down, we have the inverse relationship with the equities market, and companies are going to perform well. So going into today, I would still keep my eye on the banking stocks. I would still keep my eye on equity following yesterday's result. KCB is also an interesting stock to look at. They performed very well in 2011, and the stock has been very, very liquid over the past few weeks. So I would keep my eye in that sector. Safaricom as well, following their review of M-Pesa tariffs, has got some interest, and there could be some activity there as well.